Some of the viewers have probably heard about the news of Beijing Stock Exchange. It's truly exciting to the financial market. I want to congratulate the Chinese government and the leaders on implementing such a creative idea. In this video, I want to talk about what Beijing Stock Exchange is and why it matters. Before we move forward, I want to remind everyone that please give this video a thumb up if you think it's useful to you. Subscribe to this channel to receive the latest stock market updates. The news of creating the Beijing Stock Exchange was announced by Chinese President Mr. Xi Jinping at the beginning of September 2021. And the new exchange was founded on September 3rd, 2021. The implementation speed is really fast. It's amazing. I need to give a thumb up to the managers of this new exchange. The purpose of the Beijing Stock Exchange is to help small and medium-sized Chinese companies to raise capitals from the financial market. That's why some people call this new exchange a Chinese counterpart to the Nasdaq. The Beijing Stock Exchange was created based off an existing exchange in China. It's called NEEQ. Another name for NEEQ is New Third Board. The NEEQ exchange has been helping small companies to raise capitals since 2013. So you can think of the Beijing Stock Exchange as an improved version of NEEQ or the New Third Board. The details about how to list the companies in Beijing Stock Exchange are still being discussed. But the market has learned that the main purpose of the Beijing Stock Exchange is to help creative companies. The companies that work in new technology, new product development. So new IT companies, green energy companies, healthcare technology companies are highly welcomed by the Beijing Stock Exchange. Once the IPO requirements are confirmed, I will update everyone in this channel. Next, let's talk about the proposed trading rules. The market has received some previews. The first and foremost is a membership is required. Not everyone can trade in the Beijing Stock Exchange. You must have a certain amount of assets in order to trade in this new exchange. We don't know how much yet, but the NEEQ membership requirement gives us a very good reference point. An NEEQ member must have at least 1 million yuan assets in order to trade in the NEEQ exchange. So this 1 million mark will probably the requirement for the membership of the Beijing Stock Exchange. This is actually a very good requirement. Why? Don't forget, this new exchange is for raising capitals for new companies, startups. The valuations of these companies are usually very volatile. We don't want a lot of speculators trading in this new exchange. That will make the market even more volatile. So imposing a membership will stop a lot of speculators trading in the Beijing Stock Exchange. It will be very helpful for a long-term development and growth of the new exchange. When a stock begins to trade in this exchange, on the stock's first trading day, there is no up and down limit on the stock's trading prices. But from the second day, there will be a 30% up and down daily limit on the stock's trading prices. When you place an order to buy or sell stocks, each order must have at least 100 shares. The Beijing Stock Exchange also supports large volume trading. So why does this new exchange matter? First, it creates a new channel for entrepreneurs to raise capitals. If you are an entrepreneur, you will probably know that raising money is the most important but challenging task to an entrepreneur. This new exchange creates opportunities for entrepreneurs to reach out to those investment money. Second, as I just mentioned, if you want to trade in this new exchange, you must meet a very high standard membership requirement. This has one implication. This is actually a way of guiding the future Chinese investments from a retail investor based to a more professional institutional investment based. This can reduce volatility, speculation in the market, and support a long-term healthy development of this new exchange and the Chinese capital market. In recent days, we have seen some crackdowns from the Chinese government on the US-listed Chinese companies. Many investors are concerned, but I'm not. If you analyze the new regulations from the Chinese government, they are very beneficial from a long-term perspective. Some people are concerned that the new regulations will make some Chinese company go out of business. I would respectfully disagree. I think the new Chinese government regulations are encouraging those companies in tutoring business, sharing economy business, healthcare business to think about their social rules, take their social responsibilities, and make money ethically. The Chinese regulations are a very good example of policies that encourage ESG investment. With the new Beijing Stock Exchange, there will be 4 major stock exchanges in China. Each one of them has different focuses. The Beijing Stock Exchange focuses on helping startups. The Shanghai and Shenzhen stock exchanges focus on large companies, more established companies, and the Hong Kong Stock Exchange focuses on serving investors from the overseas. As you can see from this map, China is strategically building a more robust and complete capital market system. For a developing country, this is really a great achievement. So congratulations, China.